in insurance in this lecture and apply these insights and in particular to the issue of health insurance. So another possible title for this lecture might be From Health Care to Welfare. Let me just begin with the explanation of principles of insurance. Any insurance involves the pooling of individual risks. That is, insurance implies that to some of the insured, more will be paid out than what they paid in. Let's call those people the winners. There's those people, let's say, who get sick and paid. They are the winners. And it involves also that to other people, less will be paid out than what they paid in. Let's call them the losers. That is, those people who had health insurance but did not get sick. But the characteristic mark of insurance is that no one knows in advance who the winners will be and who the losers will be. That is to say, the winners and the losers are distributed randomly or unpredictably, and the resulting income redistribution within a pool of insured people, there is always an income redistribution from the losers to the winners. The resulting income redistribution is unsystematic, and it cannot be predicted who will be winner and who will be loser. Otherwise, if the winners or the losers could be systematically predicted, then obviously the losers, that is those people who do not get sick, would not want to pool their risk with the winners, but with other losers at lower prices, at lower premiums. Let me just choose an example. Let's say they would pool my risk sitting behind a desk most of the day with the risk of a professional football player to get involved in injuries. In that case, of course, I could easily predict that I will end up being a constant loser. That is, hardly everything happens to me, but plenty of accidents will happen to the professional football player, and of course my premium, so to speak, will have to cover the higher risk involved with the football player. Now, even if the insured themselves do not recognize that there are, so to speak, systematically predictable winners and losers, then one can, if there's free competition in the insurance market, predict that competition will bring about precisely the result that I indicated. That is, competition will bring about a result that will eliminate all systematic redistribution of income among the insured, should it somehow exist. Unless, of course, there is the motive involved on the part of the insured to subsidize other groups. So if I'm a fan, obviously, of football players and do not mind paying a higher premium for the risk involved, not involving me, so to speak, but involving only the football player, then such a systematic income redistribution can take place. But if we abstract from this type of motive, myself being a subsidizer of football players, then competition will bring about a result that any type of systematic income redistribution among the insured will disappear for the following reason. A firm, insurance company, that would engage in any type of systematic income redistribution, that is, mixing people with objectively different risks in one single group, would be outcompeted by another one that would not engage in this type of practice. Another insurance company might recognize, hey, there are people who sit behind desks and they rarely fall off their chair and injure themselves. And we can, of course, offer a lower premium for these types of people and insure them separately in a separate pool from the professional football players. And by offering lower premiums, they would, of course, lure away those people who had previously been, so to speak, misinsured, misgrouped. And this then would lead to a situation where the insurance companies yet misgrouped various people to lose, so to speak, their low-risk clients, get stuck with the high-risk clients, and would have to raise the price for those people to their natural higher level. So competition in the insurance market then would lead to ever more and more refined subgrouping of people into groups that are internally homogeneous in a way that I will explain in a few minutes in greater detail. And these groups and subgroups would be, or the discrimination of groups and subgroups would occur according to actual group risks. And the premiums for all groups would then reflect the genuine insurance risk of this particular group, and price differentials would reflect the risk differences, and prices on the average would tend to fall due to insurance competition. The discrimination that insurance companies would engage in may be based on various criteria, for instance, on regional criteria, local or geographical criteria, as for instance in the case of flood insurance, or hurricane insurance, or earthquake insurance, or fire insurance, or the discrimination might be done based on biological or genetic characteristics, such as distinguishing between females and males, between homosexuals and heterosexuals, between different races, or other genetic criteria. This would be done, for instance, in the case of health insurance. Or they might be based on certain behavioral criteria, that is, lifestyles, smokers or non-smokers, people who are occupied in certain occupations or in other occupations that pose greater or smaller risks, and so forth. Now I want to come to the question, are there things that are uninsurable, or what, so to speak, are the limitations of insurability? What sort of events can one insure oneself against, and what sort of things can one not insure oneself against? And in order to explain this, I want to briefly give you some quotes from Mises, who delineates quite clearly, so to speak, the criteria that have to be fulfilled in order to engage in any type of insurance. So this summarizes, so to speak, again, what I have explained up to this point. Mises defines events that can be insured against as risky events, and he uses a definition which he calls definition of class probability to define, so to speak, risky things. And the basic idea is something like this. The condition that must be fulfilled in order for something to be an insurable event is I and the insurer assume to know with regard to the risk concerned everything about the behavior of a whole class or group of events. But about the singular event or risk, we know nothing but that they are elements of this class. To give you an example, and then I'll give you some quotes from Mises. I assume to know everything, and the insurer assumes to know everything based on objective long-run frequency distributions about the risk of hurricane damage to the residents of some specified territory, but about any particular individual within this territory and his particular risk, I know nothing except that he is a resident of this particular territory, for which, as a whole, I assume to know everything. And just some more quotes to illuminate this concept. Again, here his definition of class probability. We know or assume to know, with regard to the problem concerned, everything about the behavior of a whole class of events or phenomena, but about the actual singular events or phenomena we know nothing but that they are elements of this class. And then he gives some example. For instance, we have a complete table of mortality for a definite period of the past in a definite area. If we assume that with regard to mortality no changes will occur, we may say that we know everything about the mortality of the whole population in question, but with regard to the life expectancy of the individual, we do not know anything but that they are a member of this class of people. And another example, let us assume that 10 tickets, each bearing the name of a different man, are put in a box. One ticket will be drawn, and the man whose name it bears will be liable to pay $100. Then an insurer can promise the loser full indemnification if he is in a position to insure each of the 10 for a premium of $10. He will collect $100 and will have to pay the same amount to one of the 10. But if he were to insure only one of them at a rate fixed by the calculus, he would embark not upon insurance business, but upon gambling. And then he says, concluding, the characteristic mark of insurance is that it deals with the whole class of events. As we pretend to know everything about the behavior of the whole class, there seems to be no specific risk involved in the conduct of the business. Neither is there any specific risk in the business of the keeper of a gambling bank or in the enterprise of a lottery. From the point of view of the lottery enterprise, the outcome is predictable, provided that all tickets are sold. If some tickets remain unsold, the enterpriser is in the same position with regard to them as every buyer of a ticket is with regard to the ticket he bought. Now, note again that in this definition of what he calls class probability, that this definition implies the absence of any systematic redistribution of income. Because if I know nothing about any particular person's individual risk, except that he is a member of some group with such and such a group risk, or for the group I know, for the total group I know, of course, what the risk is, then all risk redistribution must be random. That implies also that the individual cases that are grouped in one pool, in one group, are, so to speak, homogeneous. We cannot tell any difference between one individual in the same group and another. And if and insofar I know nothing about a particular individual within a group except that he belongs to this group, then insofar as they are homogeneous, this implies also that the actual event, so to speak, comes as in the form of an accident, an unpredictable event insofar as the individual risk exposure or risk occurrence does occur. So now, by exclusion, we can also approach the question of regarding what sort of things are uninsurable and what sort of things must be assumed, for what sort of things individual responsibility must be assumed, for what sort of things a pooling of risks is impossible. And this is obviously the case if the following condition holds. If I know with regard to a particular risk some or all of the factors that determine its outcome, then such a thing is no longer accidental. Its likelihood can be individually affected, and because of this, such events then are not events that can possibly be insured. Or to formulate it somewhat differently, again, everything that is within reach, within the control, either full control or partial control of an individual actor, cannot be insured, cannot be risk pooled, but falls within the realm of personal or individual responsibility. Now let me illustrate this and give some applications of all of this. I have obviously, and every individual has obviously, control over my actions, and you have control over your actions. And hence every risk that may be influenced by my actions is, strictly speaking, uninsurable, and only what is not controllable through my individual actions is insurable, provided that there exist long-run frequency distributions. And it also holds then that if something that was initially not controllable becomes controllable, then it would lose its insurability status. Now some examples. With respect to the risk, for instance, of the type of natural disasters, that is floods and hurricanes and earthquakes and fires, insurance is obviously possible. These events are out of an individual's control, and I know nothing about my individual risk except that I'm a member of a group of individuals which, as a group, is exposed to a certain flood risk or earthquake risk or fire risk, and so forth. On the other hand, take a risk like the risk of committing suicide. Would it be possible to insure oneself and pool one's risk with others to commit suicide? And there the answer should be quite obvious. Such a thing is not a viable venture for an insurance company, because after all, I have full control over committing or not committing suicide. An insurance company that would offer suicide insurance would, of course, attract potential suicide candidates. I go there and want to do a favor to my wife, pay my premium, shoot myself dead, and then my wife will be a millionaire. Insurance companies that would insure such a thing would likely disappear from the market very quickly. Or take another example. Would it be possible to insure oneself against committing arson? That is, burning down my own house myself. And again, the answer seems to be quite clear, that such an event, which I can bring about deliberately, the likelihood of which I can affect myself, is, strictly speaking, an uninsurable event. That my house is set on fire by lightning or something like this can be insured against. That I set my house on fire is not an insurable event. The example of unemployment. As you know, there exists such a thing that is called unemployment insurance. But as we all know, in the modern world, we have invented the art of of naming things with terms that are completely inappropriate and trying to fool people into believing that by changing the words that we change the nature of things. Unemployment is, of course, also an uninsurable risk. I have full control over being employed or not being employed. All I have to tell my boss what I really think of him, and I will be quickly fired. On the other hand, I can, of course, almost always make sure that I will be employed if I'm willing to take drastic wage cuts, for instance. If I work for free for you. In that case, I would be employed. So obviously, this is not a risk that is, strictly speaking, insurable. It falls into the realm of individual responsibility. Another example that leads us a little bit already to the problem of health insurance is the risk, for instance, insurable of not feeling good in the morning and not getting up out of bed because of this. Again, the answer should be perfectly clear. Such risk no insurer could ever undertake to insure such a thing, because people do have some sort of control over how they feel in the morning. If I would be insured against this risk and would be paid whenever I don't feel so good, you can be pretty sure that I'll spend far more time in bed than I currently do. With respect to all these risks, then, I am not in the position where I could or would say I know nothing about the particular risk of me not getting up out of bed, or me not becoming unemployed, or me not burning down my house, except that I'm a person, and all persons are afflicted by these risks with a certain frequency. In fact, I know considerably more about my individual risk, and I know considerably more about your individual risk, and you know considerably more about your individual risk. Taken an example of where we have partial control, at least. Can I insure myself against the risk of making business losses? And the answer is, again, obviously I cannot insure myself against any such risk, because while I have no full control over the actions of others who, as buyers or non-buyers of my products, determine my profits and losses, I do have some control over it. That is, I have control over my production costs, as well as the kind and quality and price of the product that produced. And in fact, I can make losses deliberately if I want to. And again, I'm not then in a position, as far as business losses are concerned, where I could or would be able to say, I know nothing about my risk of incurring losses, except that I, as all other businessmen, are faced with the same group risk, as if losses were something like being struck by lightning. And in the same vein, I cannot insure myself or pool my risk, so to speak, with the risk of others against the risk of changing or not changing my mind over time, and knowing and valuing and acting the same or in a different way from one day to the next. All of these things are, so to speak, things that fall into the realm of individual responsibility, are strictly speaking, uninsurable events. Now, with this distinction between accidental events that are insurable versus controllable events, that is, events the likelihood of which can be affected by individual action, what then about the possibility of health insurance? Now, the first impression that you get is that health and or sickness rather are insurable only insofar as the health risk for a given group is purely accidental, such as, for instance, in certain forms of accident insurance, for events such as cancer, or bodily malfunctioning. But for most health risks, and with the advance of medical knowledge for more and more of these types of health risks, we would have to say that they fall within the province of individual control, and very little in this field is actually insurable. That is, such risks must be assumed individually and paid out of pocket, or in the form of, we have to just safeguard us against these sorts of things by individual savings. Now, it is noteworthy that in all recent debate about health insurance and health care reform, most of what I have explained here, especially about the fact that certain things are completely uninsurable, is rarely, if ever, mentioned, except for Mises. Mises, already in 1922, that is before the current health care craze, remarked in his Socialism book something to this effect, and I read you a quote which is highly revealing. There he says, "To the intellectual champions of social insurance and to the politicians and statesmen who enacted it, illness and health appeared as two conditions of the human body, sharply separated from each other and always recognizable without difficulty or doubt. Any doctor could diagnose the characteristics of health, and illness was a bodily phenomenon which showed itself independently of the human will and was not susceptible to influence by will." And then he comments on this by saying, "Now every statement in this theory is false. There is no clearly defined frontier between health and illness. Being ill is not a phenomenon independent of conscious will and of psychic forces working in the subconscious. Immense efficiency is not merely the result of his physical condition. It depends largely on his mind and will. Thus, the whole idea of being able to separate, by medical examination, the unfit from the fit, and from the malingerers, and those able to work from those unable to work, proves to be untenable. Those who believed that accident and health insurance could be based on completely effective means of ascertaining illnesses and injuries and their consequences were very much mistaken. The destructionist aspect of accident and health insurance lies above all in the fact that such institutions promote accidents and illness, hinder recovery, and very often create, or at least intensify and lengthen, the functional disorders which follow illness or accidents." Again, come back to the example that I gave before. Assume that we could insure ourselves against not feeling good in the morning and not wanting to get out of bed. You can easily see that this would, so to speak, create a class of malingerers and would discourage people from just getting themselves up in shape regardless of what their physical condition might be. Now, in light of all of this then, when we look at the current situation, that is health insurance, one would expect that most risks would have to be assumed individually. Insurance, that is the pooling of risk into groups, would be limited to the strict accident variety of risks, that is foreign-induced damage, and even there are limitations to this because obviously people can also bring about accidents and can bring about accidents deliberately, which is quite frequently the case, for instance, in worker compensation cases. In Germany recently I read in a newspaper some lengthy article that explained how many people just cut their own hand off in order to collect insurance premiums. And of course, insurances would have to offer strictly limited coverage There would be no coverage of newly discovered risks, for instance. There would be also no such thing as cost plus insurance of the sort that that if my house burns down, an insurance company obviously would only insure the value of the house up to the value that I insured, 100,000. I could not afterwards say, okay, now you just built me a new house, but I want to have a bigger house for this. Nonetheless, this type of insurance exists in many cases too, in the form of in the field of Medicare and Medicaid, where whatever is deemed necessary by the doctors is covered. And generally, insurance would then be in the form of indemnity or cash payments, and possibly, but obviously less attractively, in the form of in-kind services at specified restricted providers who are providing facilities. Any further expansion of insurance in health matters would, if it takes place at all, be severely restricted to cases of very small groups of individuals who, as buyers of identical individual health maintenance services from a specified provider, are extremely homogeneous. That is, we can imagine, for instance, that people would engage in mutual insurance services if there is extreme social control exercised. That is, people control each other and make sure that there are no malingerers around. That is, require, so to speak, people that are very similar in their outlook on life and so forth, and exercise sharp control over each other in order to make sure that there are not these hazards arising. That is, people taking advantage of insurance. Now, if we look at the present reality of health insurance, then, of course, we recognize immediately that the present situation obviously has very little, if anything, to do with what we expect from a free insurance market. The present situation is very, very different. What characterizes the present situation is that in the field of medical insurance, first of all, manifestly different risk groups are grouped together in a joint pool. That is, groups of which we know from the outset they should not be grouped. The groups from which we know of in the outset, that should be different groups. They are affected by risk in a completely different fashion. Nonetheless, they are grouped together. And in addition, the current healthcare insurance system actually covers also risks that are, strictly speaking, uninsurable. And in this sense, we can say that insurance has become, to a large extent, welfare and a machinery of income redistribution. And how has this become possible, is the question. And it has become possible because of insurance regulation. That is, because certain mandates are imposed on insurance companies. Insurance companies have to fulfill certain criteria before they are allowed to operate as insurers. Now, let me give you some examples of these perversions that have been introduced into the insurance market due to state regulations. The number of insurance companies in the United States are either regulated on the state level or on the federal level. If you just look at mandates imposed on the state level, these mandates have risen from 8 mandates in 1965 to close to 1,000 mandates in the early 1990s. I have not looked into the matter in recent times, but I'm sure, of course, these numbers go up day by day. These mandates include, for instance, in 49 states in the United States, insurance companies are forced to cover treatment against alcoholism, which is obviously something that can be individually affected. Or even if we say it cannot be individually affected, we would definitely have to say it does not affect all people in the same way. Nonetheless, all insurance companies must, in their coverage that they offer to the public, so to speak, include treatment against alcoholism. In 27 states, they must cover treatment against drug addiction. In other words, those people who know from the outset that drugs are things that they don't use and they will never have to make use of treatment against drug addiction, nonetheless, through their premiums, have to pay for those who do make use and are affected by this particular risk. The use of chiropractors is covered in 45 states, again by mandates, by podiatrists, foot doctors in 37 states, psychologists, shrinks. The treatment of them has to be covered in 36 of the states. Again, it should be perfectly clear that the desire to go to a shrink or not to go a shrink can be individually affected. I know people who go to shrinks all the time. I myself would never ever enter a shrink's office. Nonetheless, through my health insurance premium, I have to pay for the risk of a group that is clearly different from my own risk. In 22 states, the services of social workers have to be included in the coverage and, of course, are reflected then in the premium. Georgia requires coverage for heart transplants. Now, again, heart transplants might certainly be a risk that can be insured against, but it should be perfectly clear that this risk is very different for different groups. Some people have the genetic traits of having heart disease in their family, others don't. You cannot opt out of this type of coverage. You get it whether you are affected by it or not, and you have to pay for it whether you are affected by it or not. In Illinois, liver transplants have to be included. In Minnesota, hair pieces have to be included. It should be perfectly clear that you just look at your father and your grandfather, and if they were bald, you can be pretty sure that you will be too. And on the other hand, if you look at your grandfather and your grandmother and down the line and you find that they all died with their full hair on their head, you can be pretty sure that you won't get it. Nonetheless, for all people, this has to be included. Marriage counseling has to be included in California. Pastoral counseling in Vermont, and very nice, sperm banking in Massachusetts. If you would have predicted a state where that would be covered, Massachusetts would of course come up pretty soon. I'm pretty sure about that. In more than a dozen of states, and the numbers is rapidly increasing, that might be well more than a dozen now, insurers may not ask any AIDS-related questions. And in Washington, D.C., again a place where you would expect this, any HIV testing is prohibited for all insurers. That is almost the same as if you would have an insurance burn your house down first and then you go afterwards and retroactively insure yourself against it. In California, again, of course, a non-surprising candidate for these sorts of insanities. In California, it is required that there's no discrimination can take between any genetic traits that distinguish people. For instance, there exists a sickle cell disease which affects mostly black men. Nobody is allowed to just investigate this from the outset. Or there exists Tay-Sachs disease, which affects mostly Jews, but that is also not permitted. And as you of course recognize immediately, is with the advances that we make in terms of genetic research, these types of differentiations would become finer and finer as scientific progress is made. Insurance companies are barred, so to speak, from recognizing this type of progress. Now, all of these mandates are, of course, at best a mixed blessing for the insurance companies. On the one hand, the insurance companies can cover more and more actually uninsurable risks, but in doing so, the costs and the premiums must, of course, be continuously raised. And this leads to the effect that an increasing number of people actually drops out of the insurance market altogether. That is to say, the number of people continuously increases that recognize that most of the risks for which they are, so to speak, insured do no longer apply to them, and the premiums are extraordinarily high, and they then decide, in this case, I will not take insurance at all. Keep in mind that in the current discussion about all of these things, there's this constant whining about people who are uninsured, without, of course, emphasizing that to a large extent, this is precisely the effect of the previous interventionist policies that were conducted. It is, so to speak, increasingly rational for people to be no longer insured at all. Of course, this is also a risky thing to do, but nonetheless, young, healthy people are almost crazy to pay the high premiums which come about by subsidizing all of these unhealthy lifestyles and covering things of which they know they have absolutely no applicability to them. Now, and this is, so to speak, again a lesson in the logic of interventionism. So the first interventionist act brought about a big mess. Insurance premiums always go up because they can no longer discriminate correctly and even include uninsurable risks. So now the problem arises of larger and larger number of people dropping out. If larger and larger number of people drop out, for those who remain insured, of course, that implies that insurance premiums have to be raised on account of this fact of more people dropping out. And what do you do in this case? That is, so to speak, then the next step, the step that we are in the United States are on the verge of taking. That is a step of making health insurance compulsory. That is, no more dropping out. Now, if this step is taken, compulsory health insurance, with all the other mandates remaining in place, then of course premiums will skyrocket even more than they have in the past. And what will then be the next step, which can also be easily predicted? Then there must be cost controls imposed. That is, there will be a rebellion on the part of the public. The prices are going out of control. Now you, government, have to do something to engage in price controls. And what will happen once we introduce price controls? Then we get either tremendous shortages of certain services, and as we know already in places like Canada or so, there exist long lines for certain types of treatment. You cannot get this, you cannot get that. You have to wait 1 year, 2 years. And then all of healthcare provisions will become increasingly politicized. That is, then the governments will design lists of good diseases for which you do get treatment, and bad diseases. For AIDS, I'm sure you get always good treatment. We even import people with AIDS from foreign countries to the United States so that we can treat them. But there are bad diseases. Let's say you you smoke too much, have something with your lung is not all right, and in that case the government will decide those people should die. We'll let them wait for 10 years before they get treatment. Now, where does all this lead then? Intervention in the insurance market creates an ever-increasing loss of individual responsibility, creates short-sightedness, and creates hazardous risks. Let me just give you another quote from Mises, who was extremely far-sighted in all of this. The psychic forces which are active in every living thing, including men, in the form of a will to health and a desire to work, are not independent of social surroundings. Certain circumstances strengthen them, others weaken them. The social environment of an African tribe living by hunting is decidedly calculated to stimulate these forces. The same is true of the quite different environment of the citizens of a capitalist society, based on division of labor and on private property. On the other hand, a social order weakens these forces when it promises that if the individual's work is hindered by illness or the effects of a trauma, he shall live without work or with little work and suffer no very noticeable reduction of his income. Matters are not so simple as they appear to the naive pathology of the army or prison doctor. Social insurance has thus made the neurosis of the insured a dangerous public disease. Should the institution be extended and developed, the disease will spread. No reform can be of any assistance. We cannot weaken or destroy the will to health without producing illness. Let me add to this consideration of problem of insurance a few additional remarks having to do with the high cost of health care, the high prices that we have to pay for health care. The insurance regulation is, so to speak, one problem that has made these things increasingly unaffordable, increasingly expensive. Another important aspect in this connection is that in all welfare states, United States and in Europe, there exist also highly restrictive licensing requirements for medical schools, for hospitals, for pharmacies, medical doctors, and other healthcare personnel. That is to say, the supply of medical doctors, for instance, is systematically restricted. Like all professions, the medical profession has made the attempt to cartelize the industry. That is to reduce the supply of medical doctors and thereby raise the price for medical services. And the medical profession in this regard has actually been more successful than most other professions have. That is, they engage basically in unionizing policies, and the tool that they use is through licensing of medical schools. As you know, there exists, of course, a huge demand for people to go to medical schools. And if there are shortages, as there are in this field for places at medical schools, the normal market operation would be there would be medical schools opened up, and people pay them to attend these medical schools. Why do these shortages do not disappear? Why are there long lines of people who are declined, who cannot go to medical school? And the answer is, of course, because it is outlawed to open up new medical schools. And who is behind this outlawing of building new medical schools? Who is behind even the attempt of forcing the existing medical schools not even to fill all the slots that they have, are, of course, the already established medical doctors. Now, by eliminating all licensing requirements for medical schools, and then by implication also for medical doctors, the supply of healthcare products and services would almost instantly rise, and prices would generally fall. And in addition, a greater variety of healthcare products would appear on the market. As far as the qualities are concerned of these things, there would then spring up, so to speak, competing voluntary accreditation agencies, which would take the place of the compulsory governmental licensing that exists currently, provided, of course, that healthcare providers and healthcare seekers believe that such accreditation would enhance their own reputation, or in the case of clients, their own safety. That is to say, medical doctors who are concerned about, I'm a great doctor and I want that certified, could get certified whatever by the Harvard Accreditation Board, others would be by the Tennessee Valley Authority accredited, or whatever it happens to be. Let me use an analogy here, what has happened in the medical profession. Imagine somebody would say, you know that medical doctors, of course, say that would be ridiculous to propose anything like that. The consumer safety would no longer be in place as it is right now. We just use an analogy to show what is wrong with this fundamental idea. Let's say somebody would point out to you that, look, some people have crummy Chevy cars and run certain risks by driving these cars, and the comfort of riding in these crummy Chevys is not the highest possible comfort. And we, as good governmental guys, we are, of course, always interested in that the consumers get only the best. And we insist now that all cars must live up to the standards of a BMW or a Mercedes. All people should drive in the greatest possible comfort for consumer protection purposes. And they would then, of course, outlaw all companies that produce cars that only live up to the Chevy standards. Only car manufacturers living up to Mercedes standards can remain in existence. What would then happen? Would we then all get, in fact, the comfort of riding in Mercedeses and BMWs? And the answer is, of course, no. What we would then get is that most people would have to resort to bikes or walk by foot, and very few people would actually be able to ride in Mercedeses and BMWs. With respect to the doctors, a very similar situation has been put in place. That is, we have basically outlawed all Chevy doctors that do little repairs, and most people, of course, for most of the cases, have little problems, which could be fixed by people who have very limited qualifications at very low prices. And instead, we are forced to go continuously to Mercedes doctors who charge Mercedes doctor prices, even for ailments that could be fixed by people who have been trained for no longer than a week or two. In addition, last point, what also has to be repaired in order to lower healthcare prices is, of course, that institutions such as the Food and Drug Administration or bureaus of public safety and health, which require of every pharmaceutical producer that all new products must be licensed by them before they can be marketed, should also be abolished. these institutions delay the production and delivery of drugs, raise the cost of production of these drugs, and thereby cause unnecessarily high prices, and in many cases, of course, also unnecessary deaths and suffering that result from the fact that drugs that could alleviate all sorts of ailments do not appear on the market until many people have died or suffered for many years. With this, I will end the lecture. Thank you so much.